The banks smashed the paper price to $61.96. They want you to believe the rally is over. They want you to believe that silver is just a speculative bubble that just popped. They are lying to you, not just a little lie. This is a lie of omission so massive, it borders on criminal negligence. While you were staring at the COMEX ticker yesterday, while the algorithms were dumping paper contracts in New York, something happened in South Korea that makes the price of silver irrelevant. Something happened that changes the fundamental chemistry of the global energy transition. Samsung SDI, one of the largest battery manufacturers on the planet, just quietly confirmed the specifications for their new solid-state production line. The media is calling it a battery breakthrough. They are talking about 900-mile range and 9-minute charging, but they are missing the single most important detail, the detail that Wall Street hasn't priced in, the detail that the mining companies haven't prepared for, the detail that makes the 1.1 billion ounce deficit look like a rounding error. The secret ingredient in Samsung's new battery isn't lithium, it isn't cobalt, it isn't nickel, it is silver, and not just a trace amount. We are talking about a massive structural increase in silver consumption per vehicle. We are talking about a technology that moves silver from being a precious metal to a strategic energy metal. In this 4-part deep dive, I'm going to expose the silver bomb that Samsung just dropped on the global supply chain. I'm going to walk you through the chemistry of the silver carbon anode. I am going to do the math that the IEA refuses to publish. And I am going to show you why Friday's price drop to $62 wasn't a crash. It was the last chance you will ever have to buy silver, before the auto industry realizes they have made a fatal calculation. The banks are playing a paper game. Samsung is playing a physics game. Physics always wins. To understand why this news is an extinction-level event for silver supply, you have to understand a little bit of chemistry. For 30 years, the world has run on lithium-ion batteries. Your phone, your laptop, the Tesla Model Y, they all use liquid electrolyte lithium-ion batteries. They are great, but they have a fatal flaw. It's called the dendrite. When you charge a lithium battery fast, the lithium ions form these little needle-like crystals called dendrites. They grow like jagged roots inside the battery. Eventually, they pierce the separator, the wall between the anode and the cathode. When that happens, boom, short circuit, thermal runaway, fire. This is why EVs take 45 minutes to charge. You have to charge them slowly to prevent dendrites. The holy grail has always been the solid-state battery, a battery with no liquid, no fire risk, instant charging. But everyone failed because they couldn't stop the dendrites, until Samsung SDI found the solution. They discovered that one specific element, when applied as a nanocomposite layer, completely solved the problem. It allowed the lithium ions to move freely, but it stopped the dendrites cold. That element is silver. For the first time in history, silver is not just being used for its conductivity, it is being used as an active material. It is becoming part of the battery's DNA. Let's put this in context. Right now, a standard gas car uses about 15 to 20 grams of silver. An electric vehicle uses more, about 30 to 50 grams. But the solid-state battery changes the math entirely. We aren't talking about switches anymore. We are talking about coating the anode of every single cell in a 1,000-pound battery pack. Early estimates suggest the silver loading could be 5 grams to 10 grams per kilogram of anode material. Some aggressive estimates suggest it could be as high as 500 grams to 1 kilogram of silver per vehicle for high-performance packs. Let's be conservative. Let's assume it adds just 50 grams per car. There are 90 million cars produced globally every year. If just 10% of them switch to solid-state batteries, that is 29 million ounces of new silver demand. But what if it's 50% adoption? What if the silver loading is actually 200 grams per car? If Toyota, Samsung, and Volkswagen hit their targets, we could see automotive demand for silver jump from 90 million ounces a year to 200 or 300 million ounces a year. Where does that metal come from? The COMEX only has 30 million ounces left. Global mining is flat at 830 million ounces. This single technology has the potential to consume 35% of the entire global mine supply. But wait, the skeptics scream. We will just recycle. We will take the old silver out of old cars. This is the recycling myth. Gold is recycled at a rate of 90%. Silver is recycled at a rate of less than 20%. Why? Dispersion. Silver is the vampire dust of industry. It is sprinkled in microscopic amounts across billions of devices. It costs more to extract it than the silver is worth. So it goes to the landfill. And for the new batteries, the silver that goes into a Samsung battery in 2026 is locked away until 2041. It is removed from the supply pool for a generation. Recycling will not save us. So, can we just dig more? No, you cannot print a silver mine. It takes 10 to 15 years to take a mine from discovery to production, and the existing mines are dying. The ore grade has collapsed. In 2005, a good mine had 15 ounces per ton. Today it has 4 ounces per ton. We have to dig up 4 times more rock to get the same amount of silver. Demand is exploding, supply is collapsing, and the inventory buffer is gone. So we have established the technology and the math. The shortage is solvable only by price. How do you profit from this? Friday's drop to $61.50 was a gift. Here is the strategic playbook. Lane 1. Physical metal. In an industrial squeeze, the rules change. Stop paying for art, start paying for weight. When Samsung needs silver for a battery, they do not care if it has a picture of Darth Vader on it. They care about the atom. If spot goes to $100, nobody is going to pay you $150 for collectability when the world is starving for the metal itself. Your goal is to accumulate the maximum number of grams, buy 100-ounce bars, buy recognized bullion. Lane 2. The mining stocks. This is where life-changing wealth is made, but there is a trap. It is called hedging. Imagine a miner that sold 50% of their future production at $30 because they were scared. Today, silver is 61. They are losing money on the upside. You must audit the miners, look for unhedged exposure, and look for primary silver miners. You want a company that lives and dies by silver prices, not a zinc miner that finds silver by accident. Also, check the geography. A mine in Idaho or Canada is worth 5 times more to Tesla than a mine in a country that might seize the assets. Clean silver trades at a premium. Lane 3. The exit strategy. Do not marry the trade forever. Technology moves fast. The silver carbon anode is the winner for the next 5 to 10 years. But in 2035, maybe they invent a graphene anode. Commodity supercycles last 7 to 10 years. We are at year 0. Ride the S-curve, accumulate now, hold through the mania, and look to swap into land or real estate when the headlines become euphoric. Now we face the immediate future. Sunday night. The markets are closed. The price is frozen at $61.50. But in Shanghai, the physical heartbeat of the Asian market, the premium is exploding. Silver on the street in Shanghai is trading closer to $66 or $67. That is a risk-free profit of $5.50 per ounce. Traders will buy New York paper contracts and sell Shanghai physical metal. This is called arbitrage, and it is the force that kills manipulation. On Sunday night, I predict we will see this arbitrage execute violently. The Asian markets see the Samsung factories being built. They view the Western price drop as a gift. They will flood the market with buy orders. The price will gap up. The banks who went short on Friday will be underwater. Finally, I need to prepare you for the mental battle. Next week will be brutal. The banks know they are in trouble. Their only weapon left is volatility. They will try to induce motion sickness. Up $3 one day, down $3 the next. They want you to hit the sell button just to get some sleep. Do not fall for it. Ask yourself, does a $3 price drop change the chemistry of a solid-state battery? No. Does a margin hike change the fact that Samsung needs 100 million ounces? No. The fundamentals are inelastic. The price volatility is noise. The Samsung bomb has exploded. The shockwave hits Monday. Physics always wins.